Banks are commercial institutions. There were 27 public sector banks in India. All these banks are owned by Government of India with some public participation. In this competitive market, only strong institution can survive. Government is trying to consolidate banking industry. Many banks see an acquisition or merger as a chance to expand their reach or scale up operations quicker. By merging banks will become strong. With efficient management of resources, banks can focus on upgrading services and revenues, optimum staff utilization, cost efficiencies, and reduced NPAs. Extra space and premises can be dehired. Additional branches can also be closed, which all can thereby reduce operation cost of banks. Alongside, acquisitions also scale banks more efficiently, not just in terms of its efficiency ratio but also in terms of its banking operations. Every bank has an infrastructure in place for compliance, risk management, accounting, operations, and IT. And now that two banks have become one, it becomes able to more efficiently consolidate and administer those operational infrastructures. The major benefits of merger and acquisition are that it reduces the cost of operation, helps in financial inclusion and broadening the geographical reach of the banking operation, as well as NPA and risk management are benefited by this. A bank merger helps an institution to scale up quickly and gain a large number of new customers instantly. Not only does an acquisition give a bank more capital to work with when it comes to lending and investments, but it also provides a broader geographic footprint in which to operate. While on the other hand, the beginning of a merger process increases the odds for an individual bank to become an acquisition target. The wave of merger is rising without there being any reasons of economic performance to justify such action. Since shareholders often demand limitations in the number of employed staff, most bank employees regard merger as a threat to their jobs. The merger of banks will have a direct impact on the savings account, current account, and other types of accounts. After the merger process is completed, these account holders need to go to the bank and thereby replace their existing passbook with the new one. This process will not affect the debit or credit cards issued to the customers from different banks involved in the merger, and thus they can continue to operate as before. However, integrated banks can issue new debit and credit cards to customers under the new branding. Now, after a merge officially takes effect, the stock price of the newly formed entity usually exceeds the value of each underlying company during its pre-merge stage. In the absence of unfavorable economic conditions, shareholders of the merged company usually experience favorable long-term performance and dividends. Oriental Bank of Commerce and United Bank merger into Punjab National Bank has created a bank with Rs 17.95 lakh crore business and 11,437 branches. The merger of Syndicate Bank with Canara Bank has created the fourth largest public sector bank with Rs 15.20 lakh crore business and a branch network of 10,324. The merger of Allahabad Bank with Indian Bank has created the seventh largest public sector bank with Rs 8.08 lakh crore business, having strong branch networks in the south, north, and east of the country. The government had merged Dena Bank and Vijaya Bank with Bank of Baroda, creating the third largest bank by loans in the country in 2018. While in 2017, another big merger took place where State Bank of India merged with 5 of its associate banks, that is State Bank of Bikaner and Jaipur, State Bank of Mysore, State Bank of Travancore, State Bank of Hyderabad, and State Bank of Patiala, along with Bharatiya Mahila Bank. As per studies conducted, most of the mergers done in the past have proved to be an overall success for the weaker banks, although there are no concrete parameters to verify this observation. Hence, going by the track record, merger and acquisition in Indian banking have been fruitful for the Indian economy. And lastly, thank you to all as you really took the time to watch this video to the end.